Yeah, I think Steeler strategy essentially, I mean, they pioneered this approach. It's caught on much quicker than I would have expected. I
It
think
is.
now maybe there's a new one announced every week and sort of a new market, multiple in the US. It's almost hard to keep track of, but now you're seeing them throughout the sort of world in various different markets. And it just shows the demand that people have to get access to Bitcoin or Bitcoin like exposure. The second piece is, yes, I think for us, we have supported many of these companies before, and that is a go-to-market avenue for us. Look, if you're the sailors of the world, once you get to that size, you can issue public debt at very cheap rates. But especially when you're just getting started, we're able to help these sort of companies put Bitcoin on their balance sheet quicker than usual.
Welcome back to Bitcoin Economy. We have Dhruv Patel, CEO of Arch Lending, with us today. Dhruv, good morning and welcome to the show.
Hey, thanks for having me.
Yeah, of course. So we've talked a few times, and you guys have been, I think, one of the fastest growing, well-funded companies to come through into this cycle as, hey, this is where we're going to focus on lending and we're going to do it really well. So we're excited to dive in today. I want to talk about what Arch Lending is, what your vision was, when you and your founding team first started Arch, what you guys are doing different coming into this cycle. Bitcoin, I think, just hit, 107, 200, 107.5. The market post Iran Israel conflict is starting to come, and let's say hope post Iran Israel conflict that the ceasefire stays. Market's starting to come up. People are going to put their Bitcoin to work. That's what we focus on this podcast. Excited to dive in. So let's just talk a little bit about like what got you into Bitcoin lending. You're at Brex, fast growing company, great operational company that's executed well on the fintech side with cards. What got you into Bitcoin lending from there?
Yeah, so I'd say like my time at Brex helped build a foundation of how you build a lending business. There's many other operational pieces of it, complexity in terms of how you raise debt, how you really want to run these businesses at scale. And along the way, my co-founder and I, we were both investing in Bitcoin and other alternative asset classes, if you will. And we just saw firsthand how banks deem these assets credit worth, right? If you go to a bank and say, hey, I have Bitcoin, you get more questions than answers, and they likely are not willing to give you credit against it. And that was really the genesis behind it was, why don't we build a first class wealth management, private banking like business for Bitcoiners? And that's really how we got started.
Yeah. And so coming from that background, you understand with cards and, I was working at a company that did a lot of the data security early on for Brex. There's a lot you need to do to keep Visa happy, to keep MasterCard happy, to work with the issuing banks and the merchant banks to make sure, this massive payments landscape, all the big players are happy. Is that something that I feel like probably set you up well to go into the lending side, which is also very regulated?
Absolutely. I think there's two pieces, right, that have set Arch well and really positioned us in the market. One is our financial hygiene with respect to how we raise money to fund these loans. We have created a CLO structure, and I'm happy to go deeper into that.
Yeah.
But what that means is it really allows us to give out loans that are more differentiated in the market. It also enables us to make sure we never rehypothecate client Bitcoin, which is a big sort of buzzword and has burned a lot of people in the past. But then also we operate with the utmost security and legal and compliance rigor as well, where we're licensed and regulated in various states in the US. And a lot of this comes from just prior experiences that the team has had in lending businesses.
Yeah, let's dive into the CLO side. I know that when we look at in the past, a lot of the funds that have blown up or the companies that have blown up, BlockFi, Celsius, anyone that was touching Three Arrows Capital that was like their death strike, right? So what is the CLO? How is that different than how other companies have funded their loan books before?
Yeah. So a CLO is essentially a vehicle, a collateralized loan obligation, if you will, where Arch is able to raise debt from external partners. Galaxy Digital is a big one that we publicly spoken about, but we essentially take funds from them and we're able to further then lend out that capital to our end client. Now, what that ensures is our clients' Bitcoin stay held with us. We don't have to transfer it out to another third party. Now, what you see across the space is various people fund themselves in a variety of different ways. Some folks take the Bitcoin of their clients and then transfer it to a third party, and then that's how they get the capital against it. Some folks will raise capital for retail dollars where they have a sort of earn account, if you will, and really everything in between. And so I think these are the variety of different aspects that people are using to fund their business. We stay strictly with this structure because the key component for us is that we never want to rehypothecate client collateral, and we can prove it to our clients because for higher loan sizes, we segregate their assets, share their on-chain address with them, and they can see throughout the whole duration of the loan, nothing has come in or out. And these are the sort of unique pieces about us that really enable our clients to trust us, and it's allowed us to scale so far.
Yes. So touching on that, proof of reserves, that's something that, Saylor's been grilled about. There's two, sides to this argument, which we won't go into, like proof of reserves for treasury companies right now. But for you guys, that is something on the lending side that we do think important to bring up is, so you guys providing addresses directly for where the collateral is held and then giving that to your customers to say, hey, this is what you need to check.
Right. And so, that's our way of also saying, look, we know we don't rehypothecate. Here's a way for us to prove it too, because you can see that nothing else is coming in or out of that wall.
Yeah. And for the custody side, who are you guys using currently to store the funds?
Yeah. So we work with only qualified custodians. Primarily Anchorage Digital is the one we use. They're a federally chartered bank in the US. I know you're well familiar with them given your time in the ecosystem. But a very well reputed and battle tested.
Yeah. Yeah. We had Nathan McCauley on the podcast, the CEO of Anchorage. And it was good to see him at Dawson, New York, the Digital Asset Summit, just cruising around. Because I feel like there's a time where you didn't see too many of these guys that were like Anchorage runs a tight ship. And I think they've been able to navigate a lot of the cycles and then the regulatory changes by being, very focused. But it's cool to see like Nathan McCauley out, shaking hands with people, working the floor, which I hadn't seen at conferences before until March of this year.
Yeah, absolutely. I think him and that team are all incredible.
Yeah. So talk to us a little bit about like just on the side of what we've learned from the last cycle on lending, BlockFi, Celsius, Genesis. You're looking at these companies that have failed. It's got to be a challenge of, hey, we're going to start a company, and like, how do you avoid those pitfalls, right? Like you talked about some of the things you're doing, but early on, what was your North Stars on, we want to build a good lending product?
Yeah. So I think there's really two things that got a lot of almost every name you mentioned into trouble. One was the rehypothecation, right? Because the second you do that, your client's Bitcoin is held with some other counterparty that you don't have control over. So now there's a third party who is like fate determines your company, if you will. So that's one that we squarely never done and sort of eliminate that risk at heart. The second is also the types of loans that you do as a company. Everything we do is over collateralized, like period, full stop. There are sort of like, many of those businesses previously did uncollateralized loans or loans to hedge funds just looking at their financials. And so those types of loans can inherently get a little more risky, obviously. And then the last piece is also risk management, where you say, okay, it's not wrong to do uncollateralized loans. Many of the traditional loans that we see, personal loans, et cetera, are those types of loans, but maybe making it a small percentage of your total loan book, making sure you don't have any one borrower that makes up more than a certain percentage of your loan book. All these sorts of covenants and sort of concentration limits that you should be aware of, I think were missing from the prior cycle of companies. And that's what really led to the downfall.
Yeah. One thing with Bitcoin is that people always ask that are learning about it, hey, Bitcoin's not backed by anything. Why should we trust it? I don't feel good as a store of value or using this as a store of value because it's not tied to anything very tangible for them. But I think looking at exactly what the current situation, the current financial market structure that we have, the US dollar is not backed by anything. It's no longer the gold standard. It's just backed by the US military and a promise. And in the same way, on the lending side, I think there needs to be more education as people don't always realize how banks work, how it's a fractional reserve system, how they do rehypothecate. Not every loan is over collateralized. like Bitcoin loans, and then realizing if you had a product like say like a large Bitcoin loan at a bank, it might be one of the most conservative products they have, especially on the lending side, because there is, hey, you can go see your reserves. This is not going to be over collateral, it's not going to be under collateralized. What are some things that you look at with like the traditional like lending banking side that you're saying, hey, like this is much riskier than what we're doing, even though Bitcoin's a volatile asset?
Yeah. I mean, I think Bitcoin backed loans is the most, Bitcoin is the most pristine collateral, and these loans are the least risky loans that you could possibly do, right? We have no losses on the loan book as a result. You can think of even one level above this, banks do loans against stocks, right? Those function very similarly, those are over collateralized by the stocks. However, the difference is stocks don't trade 24/7 like Bitcoin does, right? And so you could argue that those also are zero loss products. You just have a little more risk because you might not be able to sell them on a Sunday and things of that sort if the lender needed to. And then everything after that, I think, is just varying levels of more risk. So I think Bitcoin backed loans is certainly the lowest risk lending product out there.
Mhm. What are you seeing as some of the primary reasons people are coming to you to get loans, to get liquidity? Are they fully moving to a Bitcoin standard where they're all in Bitcoin and they need cash to pay, everyday expenses? Is it early whales that need liquidity because they're just sitting on a lot of Bitcoin? Like, what are some of the driving factors in your conversations?
Yeah, so I'd say our clients are, we run the full range here. We have individuals that were early Bitcoiners. We have individuals that are fully on a Bitcoin standard. And so as a result, they're always borrowing to meet any sort of cash needs that come up. Then we also have businesses. We have SMBs that have Bitcoin on their balance sheet. We have publicly listed companies that borrow from us. All of these folks are similar in that Bitcoin makes up a good percentage of their asset base. But also, one thing I'd point out is you might be able to go get a personal loan or a loan through a bank financed by some other means. But these Bitcoin backed loans, you'll have money same day. There's no credit check. The process is just much smoother. Whereas if you were to go interface with a bank, maybe that takes a couple of weeks and entails you answering, a lot of questions, filling out forms, things of that sort. So there is that speed component. Now going back to the use cases, I think it varies based on whether you're an individual or you're a business. But for individuals, what we've seen is a few different use cases. One is making other investments. Some folks might want to buy more Bitcoin, but many folks are using it to make a down payment on a house or diversifying into other assets that they want to just own. The second is to handle any expenses. We've seen people handle wedding expenses, handle a tax bill that's come up, an emergency medical bill, things of that sort. And then the last is, I would say, there's a variety of folks that use it for lifestyle purposes. They are Bitcoin rich, cash constrained, if you will. They don't want to sell Bitcoin. Here's a way for them to live a lifestyle that they want to, given their asset base, but continue to maintain the appreciation of their assets. And then on the business side, what we see is really a few use cases. One is handle operational expenses. Many of these businesses, want to expand or grow or buy other equipment. Borrowing against the Bitcoin they have on their balance sheet is a great way to do that, as well as maybe they want to put more Bitcoin on the balance sheet. I think you've seen that with a lot of these treasury companies that are out there, and that's now becoming a bigger field. But people are more and more looking to put Bitcoin on their balance sheet.
Yeah. And speaking of the treasury companies, it's been a hot topic to follow. We've been speaking with several of them. We just spoke with Andrew Webley from the Smarter Web company in the UK on Monday. What's been your take on how fast this has risen? We've seen Saylor and Strategy, establish the strategy itself of doing this. But did you expect this to happen so quickly? And then have you guys, is this part of your go-to-market of like, hey, let's go talk to all these treasury companies and then make them, build a relationship where they know that they can get liquidity for operational cash at any point?
Absolutely. So, a few different questions in there, Ron, but I'll
Yeah.
take them in order. Yeah, I think Sailor and Strategy essentially, they pioneered this approach. It's caught on much quicker than I would have expected. I
It
think
is.
now maybe there's a new one announced every week in sort of a new market. There's multiple in the US. It's almost hard to keep track of, but now you're seeing them throughout the sort of world in various different markets. And it just shows the demand that people have to get access to Bitcoin or Bitcoin-like exposure. The second piece is, yes, I think for us, we have supported many of these companies before, and that is a go-to-market avenue for us. Look, if you're the Sailors of the world, once you get to that size, you can issue public debt at very cheap rates. But especially when you're just getting started, we're able to help these sort of companies put Bitcoin on their balance sheet quicker than usual.
Mhm. That is one thing that we were discussing, I think, in a Twitter exchange. And punter Jeff, or Jeff Walton from the True North crew, he was, sharing a chart of just public companies holding Bitcoin and showing how much strategy holds versus every other public company, even the Marathon. Like it's just such a big gap. And a lot of their focus, and the True North guys that do a stream, every Wednesday. So tonight they're going to be doing one at 7 p.m. Pacific. They focus on like Shaler's strategy to take over the fixed income market. It's 300 trillion in corporate bonds. How can we get these financial products out there? And the thing that's different, I agree, is that Sailor has the option to go out and raise debt really cheaply. And that's not going to be the case for most of these treasury companies for the foreseeable future. I think they, like you're saying, like they need liquidity, but they're not going to be able to like run out a Strike or a Stripe or a Stride, all these new financial products, and then get enough interest because they don't have the size and the trust and the track record of running a public company for 20 years. The Sailor has that are going to allow, asset managers to trust them and to allocate capital.
Absolutely. Yeah, they've also have a clear advantage and a sort of moat, if you will, that is very hard to compete with. And I think they seem to just continue innovating here.
Yeah. So for you guys, recently announced Velocity product with Mark Moss. I personally haven't like dove in like super deep into it, so I wanted to take this opportunity to like get the pitch from you. Like, what is the product? We're exploring different types of Bitcoin yield, how people are putting Bitcoin to work, with our own podcasts and stuff that we're doing. So we want to unpack that as much as possible for people, and then tell them, hey, this is what you're getting into. This is a product, and just educate a little more before people dive in and do super risky things. So let's get into Velocity.
Absolutely. So I'll say with Velocity, you still get the core pillars of Arch in general, which is the security, transparency, no rehypothecation, and all of that still stands. And one Velocity is a brand that we created with Mark Moss. And the first product in that brand is a Bitcoin annuity, which essentially allows people to get perpetual income that's tax advantaged. And so what it is essentially mimicking a strategy that other people have used, especially in the private banking world for years, which is that you continually just borrow against your assets. Now, especially in Bitcoin, you have many folks that have more Bitcoin than they do cash flow. And a way for them to do this is borrow in a very conservative manner against their Bitcoin. And what we've seen with Bitcoin is that it continues to appreciate. I think the CAGR, correct me if I'm wrong, is north of 50% a year. And
Yeah.
so what you're able to do is effectively continually borrow against your Bitcoin and use that as a steady cash flow stream. And because it's a loan under the hood, it's not, you don't have to pay taxes on it, and you can just continue to live your.
So Saylor uses and has, or at least in his models, has been using, like 30% compound annual growth rate. And obviously early days, you're going to grow more. I think he's admitted that's going to tail off some as adoption increases, as the asset class gets bigger. Correct me if I'm wrong, but my simple understanding of it is you're basically rolling this loan, where it's you're borrowing against, say, under 30% of that like compound annual growth rate, so that like any income you're bringing in on an annual basis from this product is covered by the growth you're seeing in the asset itself, and then any interest payments that are happening. So you're able to pull out, keep your primary asset of Bitcoin, but then pull out a fixed amount that, based on historical performance, should be covered by the growth of the asset itself.
Exactly. And I'll say two things. One is there's no sort of interest payments that the borrower needs to worry about making. All of that is fully managed by Arch. And so from a client perspective here, you just get a lump sum of cash every year, and you can just go use that to live. And many of the, as you pointed out, it basically looks at the future growth of Bitcoin and how the performance goes and how much you're taking out as a cash flow with respect to the asset base that you have. We have all this very nicely broken down. If you go into archlending.com/velocity, you'll be able to see that calculator and really play around with it. People can then book a call with the team where we further walk through everything in a very white glove manner.
Yeah, so we're we know the guys over at the Rich Habits podcast. It's a very popular like personal finance podcast. And I want to collaborate with them to do. I think they sent us an email this week, so we need to follow up and do a Rich Habits like Bitcoin, Bitcoin Rich Habits podcast, and then talk about like some of these concepts of like an Elon Musk, where it's like buy, borrow, die, where you're buying assets. Elon owns a ton of Tesla stock, obviously, the majority of his net worth, and then he's borrowing against it. He's never, he's not selling that stock, he is selling the stock some, like if he has preset, executive stock sales, but he's not selling majority of it. He's just can borrow against it, use a line of liquidity against that stock. And then, later on, you're using inheritance planning and you're passing on that to your children. But for everyone that's looking at a Bitcoin standard, for hardcore Bitcoiners, they want to get to a point where they're never selling Bitcoin. They're just borrowing against it. They just need the liquidity. And this is the type of thing we want to dive into is, would you say early velocity, interest has been around someone that's moving to a Bitcoin standard, or what kind of use cases are coming first?
Yeah, I would say it's both. It's folks that are fully on a Bitcoin standard, as well as folks that maybe don't have a traditional W-2 or are approaching a retirement age, but have Bitcoin. And this is a way for them to continue to support their lifestyle. I think,
Yeah.
one of the things that you just echoed there are right? There's a popular term, just buy, borrow, die. You want to see the asset that's appreciating and spend the dollars against it, as opposed to vice versa. We were all in Vegas for the Bitcoin conference a month ago, and we had the chance to run into many clients of ours there. And one of them was like, yeah, look, I had borrowed from Arch, a month prior, and his alternative was selling Bitcoin. I can't remember exact numbers, but it was when Bitcoin had dropped in the 90s. And he was like, look, if I had sold, I would have paid the capital tax gains on that. Now, since I borrowed, I maintained the appreciation, which in and of itself would have made up for any interest payments, but you also benefited from not paying the taxes there. And so I think once people really break down certain scenarios, or even if they were to historically look at, hey, I sold Bitcoin at this point in time, what would it look like if I just borrowed instead? It sort of helps it become more concrete for many people.
And part of this, like a big pillar of how they're the driver of how this works is capital gains tax. We talked to John T. Harrell, one of our friends at Zen Ledger, at this Chicago conference earlier this year. And we talked about capital gains tax, talked about France, taxing unrealized capital gains, which is absurd. But we also talked about the US and some of the chatter around, like, are they going to end capital gains tax for Bitcoin and crypto? And he's just like, guys, like, that can't happen. Like, we're so far in debt and there's so much that comes from capital gains. Any politician, Republican or Democrat, that says that, there's no way they can pencil out and make the math work that we're just going to eliminate capital gains. Like, I would love for that to happen. I personally would. That would be phenomenal. Being realistic on what's going to actually come through if there's a poly market, I think I just don't see it being feasible with how our current budget is going, how our debt levels are rising, to where anyone in Congress, whatever the campaign says, they're not going to be able to actually make it happen and then also meet their budget obligations, which does make lending, I think, very relevant long into the future.
Absolutely. Not only is it the tax fees, that's certainly one big component of it, but the second is just maintaining appreciation of that future asset, right? It's the same reason I think people borrow against assets broadly. People borrow against their house, people borrow against their stocks. It's all in vein of those two core pillars. One is the advantage from a tax perspective, but second is continuing to own your assets.
Yeah. And right now, I think with the market looking like it wants to pick up, Bitcoin's had a very interesting chart. It looks like it's coiling, ready to take that next leg after some of the geopolitical risk has been taken off the table. Dhruv, in your personal life, what's something non-lending related that is a personal finance habit or something that you're like, hey, like, I have to recommend this to all people? Is it It could be from the self-custody side. It could be from, hey, this is like a product I'm using or how I'm storing funds or doing a standard. What's a good personal finance takeaway we can give away for our listeners?
Yeah, let me see. I think the biggest sort of personal finance things that I tend to focus on is more so and just seeing interesting assets and investment opportunities and really like doing the work to dig into, okay, why is this the case? Even with MicroStrategy and or now strategy, but all the unique offerings they have, it's easy to get on the sideline and just see things that are running and call it like, oh, this is a bubble that's going to burst. But really digging in, there's so many unique products around Bitcoin that are developing, whether, there's structured products on the derivative side, things of that sort. I think the biggest thing I'd recommend is really just focusing on like getting as deep as possible as you can in all the different investment products that are out here, because that's really the most interesting piece to me. I don't spend too much time looking at expenses. I know there's a lot of people that do like the credit card hacking. That's not really as interesting to me. But I'm really just seeing, okay, if you have the capital to deploy, what can you earn, in a sort of risk adjusted manner for yourself?
Yeah. That's actually a funny point because the Chase Sapphire Reserve, which has been last decade, one of the popular cards on the credit card hacking side. Jeff Park, guy that's been on our podcast before over at Bitwise, he was saying this is the dumbest move. They just hiked the annual fee up to $7.95. And there's all these categories. And like you have to keep up with this travel credit and you have to keep up with, these dining credits, or you can use Grubhub, but it's $10 a month. So then you have to make sure you use it and activate it every month, not all at once. And it's just like, this is going away. Like nobody's going to get rich off of this. And it's much smarter to get like a Robinhood Gold card, or, people in the comments talk about the new Gemini card, getting 4% cash back or Bitcoin back. And that's a growth rate, or, that's the hurdle right now is, can you make more on any other investment or the cash than you could just buying Bitcoin itself? And so,
I was just
yeah,
about to say, I think in the credit card space, those are the interesting ones, right? Where you spend and you get a percentage of that back in Bitcoin. Now, that percentage at the moment of spend, it was 3%. But as you continue to look at it, like that's also appreciating, just given it's in an asset. And so I think things of that are interesting. When you start to think of Bitcoin being the hurdle rate, you sort of change your landscape and the way you view investing in general.
yeah. Because there's, what is it term? I don't know if it applies to everything. I know in gift cards, there's a term breakage where you give every employee $100 on a gift card, but then they only end up spending 50% of it because gift card, and they forget about it and they don't fully spend it, the first time they swipe. And I feel like with credit card points, there's the same concept of breakage where are they fully utilizing the value? And if it's Bitcoin, it goes into the same single pot. So you're going to know what it is, and you're going to be like watching the price. Bitcoin goes to 125. You're going to be like, oh, hey, I'm going to log into Gemini and see like what that is, or I'm going to log into Fold and see what that is. Absolutely something we're following more. Going to do some comparisons. But Drew, what's the best way to follow you? What should we look out for Arch next couple months? And yeah, let's go from there.
So I think the best ways to keep up to date with us are on Twitter, Arch Lending, as well as on LinkedIn. I think Twitter is sort of the best way. And we can maybe put those notes in the sort of bio or description of this. And with respect to announcements, I think Velocity was a big one, and you'll see more sub products coming out with us and Mark together there. But also we'll be launching some other products, maybe the cheapest way to buy and sell Bitcoin on the market soon, and a few more that you'll be up to date on as you follow our Twitter.
Awesome. Yeah. I think absolutely on the yield side, not only is, there's more options coming out, but as Bitcoin price comes up, we want to dive in to make sure, we don't have another Celsius happen. We don't have another
Absolutely.
BlockFi happen. So excited to talk to you. Excited that you're implementing a lot of the same principles, rehypothecate or no rehypothecation, having these proof of reserves. We want to make sure other people are held to the same standards. There's a lot of fluff, just like in treasury companies. There's going to be a lot of companies that aren't doing the full strategy way, aren't being transparent. So appreciate you coming on. We'll bring you back on and keep going through these and keep educating people. So appreciate
Likewise.
it.